Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, my guest this segment, Nick Santiago, President and CEO InTheMoneyStocks.com. Nick, thanks for coming on the show.
Great to be back, Michael. Thank you for having me.
My pleasure. All right, you want to start off talking about the gold market via GLD, right?
Yeah, I want to talk about the gold market because last week when I was on your show, I think I had mentioned around the 162 level, start to look for a pullback in gold, and I think that's starting to take place. Although the gold market is still holding up very, very well, traders should expect this thing to pull back at least until sometime in mid to late fall. And I think that's when you're going to get your best buying opportunity in gold. I just want to reiterate that. And I think there's going to be another real potential to own gold for a long haul, but we have to wait for that next pullback.
All right, I wanted to make sure that everybody gets a chance to take a look at the chart because the shooting doesn't get much better, man. I'm looking at this thing, and it just right up, it's just like it hit the brick wall and then fell off. Good job.
Well, it's a decent little pullback. It's nothing, I think we're going to get a lot more, but, the levels are the levels, and when we put the good technicals to work, hopefully we could come up with more of these. Okay,
the downside target for the pullback, what do you think?
I'm thinking right now on the GLD around 154, and then we have to see how the market reacts at that support level. And then if it does break, obviously we'd have to look lower, and then we'd probably look back around the 150 level. So, I mean, overall, it's not a death sentence here. It's just basically, a decent pullback. And, if it pulls back further than that, you're probably looking at 145, 143 on the GLD. But either way, it's going to set up for a nice opportunity.
Okay, and I take it you're bearish on the miners too, GDX?
Yes, bearish on the miners as well. Today, GDX is down a little bit, but I think we may have even talked about that level too, around the 47.50 to 48 level. We've pulled off that pretty nicely. Again, it hasn't broken down yet, and I don't think it will until this Fed speak and probably early next week when you have all the ECB noise out of the way. But I think traders, could get interested in the GLD, the GDX, which is the gold miners ETF, around $40, around that level.
Okay. All right. Same time frame, I take it?
Yes.
All right. And J.P. Morgan.
Well, J.P. Morgan, as you know, has been the barometer of all barometers when it comes to the financials. And right now, this thing tried to break out on the 21st of August, and it looks like a failure to me. It hasn't completely failed because it's still holding that $37 base. But a break here to the downside really should really put a crimp in things for J.P. Morgan. And any close below $35 with volume is going to take this thing all the way back down to around $31.
Okay, that's a big drop for J.P. Morgan.
That stock, it definitely is.
Yeah. Are you thinking that we should be at the end of, because that's going to be some very, very bad news for a lot of banks, not just J.P. Morgan?
Well, they're the leader, and you always want to follow the leader. One thing I think I mentioned, I wanted to bring up Bank of America today because I think this one is really going to take a nosedive. So when this stock should go back down to $7 and then ultimately down to around 5 3/4 before it's all said and done on this next correction.
Okay, got it. The end of June lows. I get that. Now, the question is the banking industry sector. Do you see this recovering from those lows, or is there some bigger problem that's underneath this?
Well, to tell you the truth, everything's going to recover once the inflation rally hits, and I think that will happen later this year. So everything will recover. Financials will recover as well. I mean, as a trader, we'll look to trade them when the time is right. But right now, I think that they have more downside than upside.
Okay, and are you going to be shorting these now, or is there some other triggering mechanisms you want to see in place?
Shortly. We'll be shorting them shortly.
Okay, all right. The other question I've got for you now is in regards to the S&P market, because you've been looking for a pullback on that, right?
Yeah, I'm already short the S&P, but I'm short right at the same level. So I'm basically flat on my S&P short at the moment, as I got in a little bit early. But I am looking for the S&P to fall throughout the next couple months.
Okay, into the fall, like you were talking about with the rest of the markets, right?
Exactly.
Are you thinking that there's something big about to hit on this stuff? Because what you picked out is really if there's three legs to a stool, you just knocked all three of them out.
Well, I hopefully we have this correct, but the markets are at a real vulnerable position, and my cycle work has us penciled in for one more correction, and it should be a sharp one. To the market's benefit, even though my cycle dates have been correct, my lows and highs have not. We've gone higher than I thought, and we didn't go as low as I originally thought. So, that's why time is always more important than price. But we should have one more pretty good correction here. And
well, let me get into this for a second with you. We're at a critical level right now because tomorrow is Friday, and we're going to go into a long weekend. This is traditionally when everybody comes back. But 1,400 on the S&Ps, you break that on a closing basis, and it's going to be fairly psychologically, at minimum, significant to people.
Well, it's going to break. I mean, I see this breaking. So, I mean, I'm looking for it to go down. I think that how traders react is really, we trade central bank inflation creation now. So what they're going to do is they're going to look to Bernanke tomorrow. He's going to disappoint.
Right.
Then they're going to look to Draghi the following week. He can't say anything because Germany has to approve anything that he does. So I think when that's a disappointment and the markets start to fall, the central bankers will come in and they'll reconvene, and then they'll finally inflate. And that's, we want to be a part of that rally when it happens.
Got it. And you're thinking sometime October-ish?
Yeah, I'm thinking sometime in the fall. We'll watch for the pattern there. The pattern has always been rock solid, especially around turning points. So, yeah, I'm thinking sometime in the fall season, mid to late fall. And, that's when we'll start to position ourselves for an end-of-year rally.
Okay, we got a few minutes, so we can dance around the campfire a little bit here. The bond market, we've got a rally going into 149, which looks like about a resistance level. Let me translate that to what you're thinking about on the TLT.
I'm thinking 130 right now on the TLT. You're getting a little bit of a pullback today as we hit a 50% retracement from the July 25th top to the most recent bottom made on August 16th. So there's a natural resistance point right here. Also, you have the 50 MA on the TLT. But ultimately, I think the TLT has a chance to get back up to 130. How it reacts there is really the key. Once the TLT gives you a consolidation pattern at 130, then it really can make another move higher.
Okay. All right. So you're really not throwing in the towel on higher rates just yet.
No. Well, I think the TLT will put a high in this year. I think, but it's going to be at the end of the year. Okay. So those of you wanting to, get a mortgage, I would do so by the end of the year.
Okay. All right. Got that part. Before we go, one last market before we need to tune out? Sure. Any particular ones that you're...
Any particular one?
Yeah.
Not much. Right now, I think traders should watch Apple. I mean, that's starting to roll over already. Not a ton of volume there, but when this thing goes, it's going to take everything down with it. First pit stop will be 600, and then ultimately, if this thing breaks the way I think it can, 475 is on the board.
Okay, so are you starting to lay in average shorts now and average in on this?
Well, we're starting to play Apple a few different ways via puts, going out to the October, November, using that time period. Don't buy September puts. You can also play Apple via the QID. And you can also play Apple just shorting the triple Q.
So you're thinking the biggest volatility across the board on the equity index is going to be in the NASDAQ sector?
I think it's going to be, and also the Russell 2000, which has really lagged the overall markets, because if you take a look at the Russell hasn't even been able to get to its April high yet. So this sector is one that should be leading, and it is lagging. And that's always a warning sign to us all.
Got it. All right, before we go, give everybody a way to watch you pull these trades off.
Yeah, come on over to InTheMoneyStocks.com. We offer a 7-day free trial to our intraday stock chat. You can watch our desktop and see us take some trades today. We took the spider low. We had the dead low of the day, Michael.
Yay.
And we hit that all the way up to the 140.70 level. We just closed that trade out a little while ago. So come over, watch us do it, or come to our research center if you have a regular job and you want to watch everything that we do in the evening and all of our swing trade setups.
Great, Nick. Thanks so much, buddy.
Thank you, Michael. Have a great holiday.
You too. Everybody, Nick Santiago, President and CEO, InTheMoneyStocks.com.